Hi Ezekiel, this is Ryan with TrendLizard.com again. I am going to take a look at your third ticker, which is GDX, the Van Eck Vectors Gold Miners ETF trading on the New York Stock Exchange. So this is a great proxy of gold and an interesting one. It's one that I've definitely analyzed before, and so we're just going to dive right in, dating back to its inception, which was in 2006. So this is all the data that's ever occurred for GDX on a weekly chart here. You can see that it's just really undergone some big swings, up, down, and now it's trying to do the latest upswing. So overall, not a great trend. Obviously, there have been some huge moves in there that have been tradable along the way, but on any larger time frame, even just over the course of 10 years, you can see it just kind of keeps coming back to the mean. So that's the case. Probably what interests you about it is wondering if this advance off the 2016 low is the start of a much larger up move or just another swing within a vacillating sideways move. So we're going to zoom in on this move here and take a closer look. As we can see here, despite the kind of chaotic looking chart, the potential is absolutely there that the advance off the 2016 low is the start of a much larger advance. This move off the 2016 low looks like a trendy move. The pullback that occurred off the 2016 high looks like a counter trend move. The opportunity was there for the move off December's low to really go higher right away. Unfortunately, it hasn't played out that way. It's been a little bit more chaotic, but the potential is there for it to continue a lot higher. So I want to explain a little bit more in detail what I'm looking at here. First off, a move above 26.75 at any time is a very good indication that the uptrend has resumed. Obviously, it's going to take some work before GDX gets back up to that level, but that's the one you need to be watching on any kind of longer term basis as a good indication that GDX is a good buying opportunity. Now, as far as the downside is concerned, there's a couple different ways this could play out. If GDX moves below 21, essentially the level that it just tested within the last week or so, it's going to mean that the pullback that began off the 2016 high is not quite over. So a move below 21 points it back down to the low established in December before the next opportunity arises for GDX to resume its uptrend. So long story short, I would not want to buy GDX at this time until you see some type of strength emerge. If you can, I'd wait till it hits 26.75 to buy it. That would be a really good opportunity, and I can certainly help you place your stop levels below GDX's price at that time when it happens. If you do own it, it's a little bit more tricky play. If you're more of a shorter term investor, any kind of breakdown below 21 would be a good indication that it's probably time to get out unless you can stomach a move back down to 19. And then on any larger time frame, any decline notably below 19 would be a really bearish indication. We don't expect that to happen. We do think GDX is going to be bullish overall, or at least give us another large up leg in the near future. But that's how I'd play it. So I think your buying opportunity comes at least on some type of strength, if not waiting completely until a move above 26.75 occurs. So that's our outlook on GDX. We are bullish overall. We just want to see a little bit more strength emerge before we actually buy it. So I hope that's helpful, Ezekiel. It's been a pleasure, and I hope to talk to you soon. Take care.